Hey everyone, and welcome to your one-stop shop for understanding all things thematic ETFs. Heard the buzz about them, but not sure what they are or if they're right for you. Stick around, because in this video, we're cracking open the world of thematic ETFs. We'll break down how these unique investment vehicles can target hot trends like clean energy or artificial intelligence, potentially giving your portfolio a serious growth boost. But are they a surefire path to riches, or is there a hidden catch? We'll explore the potential benefits and challenges of thematic ETFs, so you can make informed decisions about your financial future. Let's dive in and see if thematic ETFs are the secret weapon your portfolio needs. What are thematic ETFs, and how do they differ from traditional ETFs? Both thematic ETFs and traditional ETFs offer ways to invest in a basket of securities, but they target the market in fundamentally different ways. Here's a breakdown of their core characteristics and how they diverge. Traditional ETFs. Focus: track a broad market index, for example, S&P 500, or sector, for example, technology, healthcare. Composition: holdings are predetermined by the underlying index and represent a diversified slice of the chosen market segment. Objective: provide exposure to a specific market segment and generally aim to mirror its performance. Risk: relatively lower risk due to diversification across multiple companies within a sector or the entire market. Examples: SPDR S&P 500 ETF, SPY, Vanguard Energy ETF, DDE. Thematic ETFs. Focus: capture a specific investment theme or trend, for example, robotics, artificial intelligence, clean energy. Composition: holdings are chosen by the ETF provider based on their alignment with the chosen theme, and companies can span different sectors. Objective: capitalize on the growth potential of a specific trend and potentially outperform the broader market. Risk: higher risk due to concentration on a specific theme, making them more volatile than traditional ETFs. Examples: ARK Innovation ETF, ARKK, Global X Robotics Artificial Intelligence ETF, ROBO. Key differences. 1. Investment target: traditional ETFs target established market segments, while thematic ETFs chase emerging trends. 2. Composition: traditional ETFs are passively managed and hold what the index dictates. Thematic ETFs are actively managed, with holdings selected based on the theme. 3. Objective: traditional ETFs aim to mirror the performance of the underlying index. Thematic ETFs aim to outperform the market by capitalizing on a specific trend. 4. Risk: traditional ETFs offer broader diversification, leading to lower risk. Thematic ETFs are concentrated on a theme, resulting in higher risk and volatility. In essence, traditional ETFs are like buying a pre-made portfolio representing a specific market segment. Thematic ETFs are like building a custom portfolio focused on a specific theme with the potential for higher growth but also greater risk. What are the benefits of using thematic ETFs for long-term investing? Thematic ETFs offer several advantages for long-term investors seeking exposure to specific trends and potentially enhancing their portfolio returns. Here's a closer look at the key benefits. 1. Capitalize on megatrends. Thematic ETFs allow investors to tap into long-term growth trends that are expected to reshape industries and economies. Examples include artificial intelligence, clean energy, or cybersecurity. By investing in these themes early, investors can potentially benefit from their long-term growth trajectory. 2. Targeted exposure. Unlike traditional ETFs that provide broad market exposure, thematic ETFs offer a concentrated focus on a specific theme. This allows investors to gain exposure to a sector or technology they believe has strong growth potential without having to pick individual stocks. 3. Diversification by theme. While thematic ETFs hold companies within a specific theme, they can still offer diversification across different sectors. For example, a clean energy ETF might hold companies developing solar panels, wind turbines, and battery storage, providing diversification within the clean energy theme. 4. Convenience and lower costs. Thematic ETFs bundle exposure to multiple companies within a theme into a single security. This eliminates the need for individual stock picking and research, saving time and effort. Additionally, thematic ETFs often come with lower expense ratios compared to actively managed mutual funds targeting similar themes. 5. Potential for outperformance. Thematic ETFs can potentially outperform traditional, broad market ETFs if the underlying theme experiences significant growth. Early investors in disruptive technologies or emerging markets can benefit handsomely if their chosen theme becomes mainstream. Benefits in a long-term context. These advantages become particularly relevant for long-term investors. Focus on long-term trends. Thematic ETFs align well with a long-term investment strategy as they target trends expected to unfold over a multi-year horizon. Investors can hold them for an extended period to benefit from the potential growth of the underlying theme. Compounding. When held for a long time, any outperformance generated by a thematic ETF can be compounded, significantly boosting overall returns. Reduced emotional trading. The long-term focus of thematic investing discourages impulsive decisions based on market volatility. Investors can ride out short-term fluctuations if they believe in the long-term potential of the theme. What are some of the potential risks associated with thematic ETFs? Thematic ETFs offer exciting opportunities for growth, but they also come with inherent risks that long-term investors should be aware of. Here's a breakdown of the key potential pitfalls. 1. Concentration risk. Thematic ETFs are inherently concentrated, focusing on a specific theme or trend. This means the performance of the ETF is heavily reliant on the success of a limited number of companies. If the chosen theme falls out of favor, the entire ETF can suffer significant losses. 2. Volatility. Due to their concentration, thematic ETFs tend to be more volatile than broad market ETFs. This means their price can fluctuate more dramatically in response to market movements or news related to the specific theme. Investors with a low tolerance for risk might find these fluctuations uncomfortable. 3. Theme obsolescence. The world of innovation and technology moves fast. There's a risk that the theme an ETF targets could become obsolete over time. This could happen due to technological advancements, changes in consumer preferences, or regulatory shifts. 4. Popularity and liquidity. Thematic ETFs, especially those focused on niche themes, might not have high trading volumes. This can lead to liquidity risk, making it difficult to buy or sell shares at a fair price, particularly during periods of market volatility. 5. Management expertise. Thematic ETFs are actively managed, meaning the ETF provider selects companies based on their alignment with the theme. The success of the ETF depends heavily on the manager's ability to identify the right companies and adjust the holdings as needed. Choosing an ETF with a reputable provider with a strong track record is crucial. 6. Fees. While generally lower than actively managed mutual funds, thematic ETFs might have slightly higher expense ratios compared to broad market ETFs. These fees can eat into long-term returns, so comparing expense ratios before investing is essential. 7. Underlying company risk. Even within a well-chosen theme, individual companies within the ETF can face their own challenges. These could be company-specific issues, management problems, or industry disruptions. Risks in a long-term context. While these risks pose a challenge, some factors can be mitigated in a long-term investment strategy. Diversification. Thematic ETFs should be just one piece of a well-diversified portfolio. Combining them with broad market ETFs and other asset classes can help reduce overall portfolio risk. Time horizon. The long-term nature of thematic investing allows investors to ride out short-term market fluctuations. Investors with a longer time horizon can potentially weather periods of underperformance if they believe in the long-term potential of the theme. Research and selection. Careful research into the chosen theme, the ETF provider's track record, and the underlying holdings is crucial. Investors should understand the specific risks associated with the theme and the companies within the ETF. How does the investment strategy for thematic ETFs differ from traditional ETFs? The investment strategy behind thematic ETFs and traditional ETFs diverges significantly in terms of target exposure, management style, and risk profile. Here's a breakdown of the key differences. Target exposure. Traditional ETFs aim for broad market exposure by tracking a specific market index, for example, S&P 500, or sector, for example, technology. They passively replicate the holdings and performance of the underlying index. Thematic ETFs focus on capturing a specific investment theme or trend, for example, robotics, clean energy. They actively select companies based on their alignment with the theme, and holdings can span different sectors. Management style. Traditional ETFs, passively managed. The holdings and weighting within the ETF are predetermined by the underlying index. There's no attempt to outperform the market, the goal is to mirror its performance. Thematic ETFs, actively managed. The ETF provider uses its research and expertise to select companies that align with the chosen theme. The holdings and weighting within the ETF are actively managed to maximize the potential of the theme. Risk profile. Traditional ETFs, generally lower risk due to diversification across multiple companies within a sector or the entire market. This diversification helps to smooth out volatility and provides a more stable investment. Thematic ETFs, higher risk due to concentration on a specific theme. The performance of the ETF is heavily reliant on the success of a limited number of companies. If the theme underperforms, the ETF can experience significant losses. Additionally, thematic ETFs tend to be more volatile due to their concentrated nature. Investment strategy implications. These differences in target exposure, management style, and risk profile translate into distinct investment strategies. Traditional ETFs, suitable for a core portfolio holding. They offer a low-cost, diversified way to gain exposure to a specific market segment and benefit from its long-term growth without active management. Thematic ETFs, more suited for a satellite portfolio holding. They offer the potential for higher growth by capitalizing on specific trends, but they also come with higher risk and require more active monitoring and research. What factors should be considered when selecting thematic ETFs for a long-term investment portfolio? Selecting thematic ETFs for a long-term investment portfolio requires careful consideration of several factors to maximize potential returns while mitigating risks. Here's a breakdown of the key elements to evaluate. Theme analysis. Relevance and disruption. Assess the long-term relevance and disruptive potential of the theme. Is it a fad or a trend with long-term staying power? Will it fundamentally change industries and economies? Growth potential. Evaluate the theme's growth trajectory. Is it in an early stage of development with significant room for expansion, or is it a mature theme with limited growth potential? Competition and regulation. Analyze the competitive landscape within the theme. Are there established players, or is it an open field for new entrants? Consider potential regulatory hurdles that could impact the theme's growth. ETF structure. Underlying holdings. Research the specific companies within the ETF. Do they represent strong players within the theme with good management and solid financials? Analyze the diversification within the ETF. Are there too few holdings, or is it well diversified across different companies and sub-themes? Expense ratio. Compare expense ratios of different thematic ETFs targeting the same theme. Lower expense ratios translate to higher long-term returns. Track record. If the ETF is actively managed, investigate the track record of the ETF provider and their ability to select companies that outperform the broader market. Portfolio integration. Overall portfolio allocation. Thematic ETFs should be a portion of a well-diversified portfolio. Determine the appropriate allocation based on your risk tolerance and long-term investment goals. Thematic overlap. Avoid thematic ETFs with significant overlap in holdings. This undermines diversification and exposes you to redundant risks. Long-term commitment. Thematic ETFs are best suited for long-term investors. Be prepared to hold them for several years to ride out short-term volatility and capitalize on the long-term growth potential of the theme. How do thematic ETFs fit into an overall asset allocation strategy? Thematic ETFs can be a valuable addition to an overall asset allocation strategy, but it's crucial to understand how they fit within the broader portfolio context. Here's a breakdown of their role and how to integrate them effectively. Core versus satellite portfolio approach. Core portfolio. This forms the foundation of your portfolio and should consist of low-cost, diversified assets like broad market ETFs or index funds. These provide stable, long-term growth through exposure to established market segments. Satellite portfolio. This is a smaller portion of your portfolio dedicated to higher risk, higher potential assets like thematic ETFs, individual stocks, or sector-specific ETFs. These offer the chance for amplified returns by capitalizing on specific trends or sectors with strong growth potential. Thematic ETFs as satellite holdings. Thematic ETFs, with their concentrated focus and higher risk profile, are best suited for the satellite portion of your portfolio. Here's why. Diversification. Core holdings provide broad diversification, mitigating risk. Thematic ETFs add targeted exposure to specific themes, potentially boosting returns, but also increasing risk. Growth potential. Thematic ETFs can offer significant growth potential by capturing emerging trends. However, they are more volatile than core holdings. Risk tolerance. Satellite holdings should align with your risk tolerance. Investors comfortable with higher risk can allocate a portion of their portfolio to thematic ETFs for potential growth. Benefits of thematic ETFs in asset allocation. Enhanced growth potential. Thematic ETFs can potentially outperform core holdings by capitalizing on specific trends with high growth potential. Customization. They allow investors to tailor their portfolio to their specific beliefs about future trends and industries. Innovation exposure. Thematic ETFs can provide exposure to disruptive technologies and emerging sectors that might not be well represented in traditional broad market funds. What are some examples of successful thematic ETFs with a long-term track record? While thematic ETFs are a relatively new investment vehicle, some have established themselves with impressive track records over the past decade, as of June 11, 2024. Here are a few examples, but it's important to remember that past performance is not necessarily indicative of future results. 1. Invesco QQQ Trust. QQQ, launched in 1999, QQQ isn't technically a thematic ETF, but it closely tracks the Nasdaq 100 index, which is heavily weighted towards technology giants like Apple, Microsoft, and Amazon. These companies have been at the forefront of innovation and disruption for decades, contributing to QQQ's impressive long-term growth. 2. SPDR S&P Semiconductor ETF, XSD, launched in 2001. XSD tracks the performance of companies involved in the design, manufacture, and sale of semiconductors. The semiconductor industry has been a key driver of technological advancements for decades, and XSD has benefited from this long-term trend. 3. iShares Global Tech Innovation ETF, IGV launched in 2007. IGV focuses on a broader range of technology companies globally. It includes companies involved in areas like cloud computing, artificial intelligence, and cybersecurity. While not as established as QQQ or XSD, IGV has demonstrated strong growth potential in these rapidly evolving fields. How can thematic ETFs be used to gain exposure to specific trends or sectors? Thematic ETFs offer a targeted approach to gain exposure to specific trends or sectors that traditional, broad market ETFs might miss. Here's a breakdown of how they can be leveraged within an investment strategy. Capitalizing on emerging trends. Thematic ETFs allow investors to tap into long-term growth trends with high disruptive potential. For example, an ETF focused on artificial intelligence, AI, can provide exposure to companies developing AI technologies across various industries. This allows investors to participate in the potential growth of AI without needing to pick individual stocks. Targeted sector exposure. While traditional sector ETFs provide exposure to established sectors like technology or healthcare, thematic ETFs can offer a more focused approach. For instance, a clean energy ETF might hold companies involved in solar, wind, and geothermal energy, providing exposure to a specific subsector within the broader energy sector. Customization and diversification. Thematic ETFs allow investors to tailor their portfolio to their beliefs about future trends. For example, an investor bullish on the future of electric vehicles, EVs, can invest in an ETF focused on EV manufacturers, battery technology companies, and charging infrastructure providers. This provides diversified exposure to the entire EV ecosystem. Benefits of using thematic ETFs for trend/sector exposure. Convenience. Thematic ETFs bundle exposure to multiple companies within a specific theme or sector into a single security. This eliminates the need for individual stock picking and research. Lower costs. Thematic ETFs often come with lower expense ratios compared to actively managed mutual funds targeting similar themes or sectors. Potential for outperformance. Thematic ETFs can potentially outperform broad market ETFs if the underlying theme or sector experiences significant growth. Early investors in disruptive trends can benefit handsomely if their chosen theme becomes mainstream. How do thematic ETFs handle rebalancing, and how does it affect investors? Thematic ETFs, like most other ETFs, undergo rebalancing to maintain their alignment with the underlying theme or index they track. This process can impact investors in a few ways. Rebalancing process. Monitoring holdings. The ETF provider continuously monitors the weightings of companies within the ETF compared to the target composition of the theme or index. Trigger for rebalancing. Rebalancing is typically triggered when the weightings of certain companies deviate from their target allocation by a predefined threshold. This threshold can vary, depending on the ETF provider. Buying and selling. To achieve the desired composition, the ETF provider buys or sells shares of companies within the ETF. For example, if a company's stock price increases significantly, its weighting in the ETF might become higher than intended. The provider would then sell some shares of that company to bring its weighting back down to the target level. Conversely, if a company's stock price falls, the provider might buy additional shares to maintain its desired weighting. Impact on investors. Trading activity. Rebalancing involves buying and selling of underlying securities, which can generate trading activity. This might lead to transaction costs for the ETF, which are reflected in its expense ratio. Tracking error. Rebalancing isn't always a perfect science. The buying and selling activity might not perfectly achieve the target composition, leading to a slight tracking error between the ETF's performance and the underlying theme or index. Tax implications. Depending on the frequency and size of rebalancing activities, investors might incur capital gains taxes if the ETF sells appreciated securities. However, some ETFs employ tax-efficient rebalancing strategies to minimize these tax implications. Investor considerations. Expense ratio. When choosing a thematic ETF, compare expense ratios. A higher expense ratio might indicate more frequent rebalancing activity, potentially leading to higher trading costs for the ETF. Tax efficiency. Look for information on the ETF provider's rebalancing strategy and its focus on tax efficiency. This can help minimize potential tax liabilities for investors. Long-term focus. While rebalancing can cause short-term price fluctuations, the long-term goal is to maintain the ETF's alignment with the chosen theme. Investors with a long-term horizon shouldn't be overly concerned about short-term volatility caused by rebalancing. Are there any regulatory considerations specific to thematic ETFs? Yes, there are some regulatory considerations specific to thematic ETFs that investors should be aware of. While thematic ETFs are generally subject to the same regulations as traditional ETFs, their unique characteristics can raise additional concerns for regulators. Here's a breakdown of the key points. General ETF regulations. Thematic ETFs, like all ETFs, are subject to existing regulations governing exchange-traded funds. These regulations address areas like disclosure. ETFs must provide detailed disclosure documents outlining their investment objectives, holdings, fees, and risks. Trading transparency. The creation and redemption process of ETF shares must be transparent and adhere to exchange listing requirements. Custody of assets. The underlying assets of the ETF are typically held by a qualified custodian to ensure their safety and segregation from the ETF provider's assets. Regulatory considerations for thematic ETFs. Due to their thematic focus and active management, thematic ETFs might face additional scrutiny from regulators. Transparency of theme definition. Regulators might require clearer definitions of the theme and ETF targets. This ensures investors understand the specific area of exposure and potential risks involved. Underlying holdings analysis. Regulators might pay closer attention to the underlying holdings within a thematic ETF. This ensures that companies align with the stated theme and the ETF isn't straying from its objective. Concentration risk and liquidity. Thematic ETFs' concentration on specific themes can raise concerns about concentration risk and potential liquidity issues. Regulators might impose limitations on the level of concentration or require minimum liquidity thresholds for the underlying holdings. Marketing and suitability. Regulators might be stricter regarding the marketing of thematic ETFs, ensuring it's fair, balanced, and doesn't downplay the inherent risks. Additionally, suitability standards for recommending thematic ETFs to investors might be more stringent. Impact on investors. These regulatory considerations can impact investors in a few ways. Evolving regulatory landscape. Thematic ETFs are a relatively new investment vehicle, and regulations might evolve as regulators assess potential risks and benefits. Investors should stay informed about any regulatory changes that could affect their thematic ETF holdings. Potential for tighter restrictions. If regulators find thematic ETFs pose excessive risks to investors or market stability, they might implement stricter regulations, limiting their flexibility or investment strategies. Importance of research. Given the potential for evolving regulations and additional scrutiny, thorough research into a thematic ETF structure, underlying holdings, and the ETF provider's compliance practices becomes even more crucial for investors. How can thematic ETFs be used to diversify a long-term investment portfolio? Thematic ETFs can be a valuable tool for diversifying a long-term investment portfolio, but it's crucial to understand how they contribute to diversification and how to use them effectively. Here's a breakdown of their role in portfolio diversification. Traditional diversification versus thematic diversification. Traditional diversification. This involves spreading your investments across different asset classes, for example, stocks, bonds, real estate, and sectors, for example, technology, healthcare, consumer staples. This reduces risk by ensuring your portfolio isn't overly reliant on the performance of any single asset class or sector. Thematic diversification. This involves investing in ETFs that target specific trends or themes, for example, artificial intelligence, clean energy, robotics. While thematic ETFs offer exposure to specific areas of growth, they can also increase concentration risk if not used strategically. Thematic ETFs and portfolio diversification. Thematic ETFs can contribute to diversification within a portfolio framework, but they shouldn't be the sole source of diversification. Core versus satellite portfolio approach. Core portfolio. This forms the foundation of your portfolio and should consist of low-cost, diversified assets like broad market ETFs or index funds. These provide stable, long-term growth through exposure to established market segments. Satellite portfolio. This is a smaller portion of your portfolio dedicated to higher risk, higher potential assets like thematic ETFs, individual stocks, or sector-specific ETFs. These offer the chance for amplified returns by capitalizing on specific trends or sectors with strong growth potential. Diversification within themes. Avoid thematic overlap within your satellite holdings. Diversify across different themes to mitigate risk and capture a broader range of growth opportunities. For example, invest in separate ETFs for clean energy, cybersecurity, and healthcare innovation. Benefits of thematic ETFs for diversification. Exposure to emerging trends. Thematic ETFs allow you to add exposure to disruptive trends and innovative sectors that might not be well represented in traditional broad market ETFs. This can enhance your portfolio's long-term growth potential. Customization. Thematic ETFs allow you to tailor your portfolio to your specific beliefs about future trends and industries. This can provide a more personalized approach to diversification beyond traditional asset classes. Reduced correlation. Thematic ETFs can have lower correlation with traditional asset classes like bonds. This can help reduce overall portfolio volatility, especially during market downturns. What are some of the challenges of using thematic ETFs for long-term investing? Thematic ETFs offer the potential for exciting growth in a long-term investment strategy, but they also come with inherent challenges that require careful consideration. Here's a breakdown of the key hurdles to navigate when using thematic ETFs for long-term investing. Concentration risk. Over-reliance on a theme. Thematic ETFs focus on a specific theme or trend. If the chosen theme underperforms or becomes obsolete, the entire ETF can suffer significant losses. Long-term investors need to carefully evaluate the theme's sustainability and potential for disruption by new technologies or changing consumer preferences. Volatility. Exposure to short-term fluctuations. Due to their concentration, thematic ETFs tend to be more volatile than broad market ETFs. Their price can fluctuate dramatically in response to news or developments related to the specific theme. This can be stressful for long-term investors, but it's important to maintain a long-term perspective and avoid emotional investment decisions based on short-term volatility. Theme obsolescence. Rapidly evolving landscape. The world of innovation and technology moves fast. There's a risk that the theme an ETF targets could become outdated over time. Long-term investors need to be aware of this risk and stay informed about advancements within the chosen theme to assess its continued relevance. Management expertise. Active management reliance. Thematic ETFs are typically actively managed, meaning the ETF provider selects companies based on their alignment with the theme. The success of the ETF depends heavily on the manager's ability to identify the right companies and adjust holdings as needed. Long-term investors should research the ETF provider's track record and expertise in managing thematic investments. Fees and expenses. Potential cost drag. While generally lower than actively managed mutual funds, thematic ETFs might have slightly higher expense ratios compared to broad market ETFs. These fees can eat into long-term returns. Long-term investors should compare expense ratios and choose ETFs with a cost structure that aligns with their investment goals. Liquidity concerns. Trading challenges. Thematic ETFs, especially those focused on niche themes, might not have high trading volumes. This can lead to liquidity risk, making it difficult to buy or sell shares at a fair price, particularly during periods of market volatility. Long-term investors might need to be patient when entering or exiting positions in less liquid thematic ETFs. Regulatory uncertainty. Evolving regulatory landscape. Thematic ETFs are a relatively new investment vehicle, and regulations might evolve as regulators assess potential risks and benefits. Long-term investors should stay informed about any regulatory changes that could affect their thematic ETF holdings. Long-term commitment. Patience is key. Thematic ETFs are best suited for investors with a long-term horizon, ideally 10 years or more. They can outperform traditional ETFs if the underlying theme experiences significant growth, but this growth might not materialize overnight. Long-term investors should be prepared to hold thematic ETFs for the long haul and avoid panicking during periods of underperformance. Strategies for mitigating challenges. Thorough research. Extensive research into the chosen theme, the ETF provider's track record, and the underlying holdings is crucial before investing. This helps identify potential risks and opportunities associated with the thematic ETF. Diversification. Thematic ETFs should be just one piece of a well-diversified portfolio. Combining them with broad market ETFs and other asset classes can help reduce overall portfolio risk and mitigate concentration risk associated with thematic investments. Realistic expectations. Don't expect thematic ETFs to be a guaranteed path to riches. Understand the inherent risks and potential challenges involved before investing. Active monitoring. Long-term doesn't mean neglect. Regularly monitor your thematic ETF holdings and the performance of the underlying theme to assess its continued relevance and make adjustments if necessary. How do thematic ETFs compare to mutual funds that focus on specific themes? Here's a breakdown of how thematic ETFs compare to mutual funds that focus on similar themes, highlighting the key differences in structure, management, and investor considerations. Structure and trading. ETFs. Thematic ETFs trade on stock exchanges like individual stocks. Investors can buy and sell shares throughout the trading day at market price. They offer transparency in holdings and pricing, as the underlying holdings are disclosed daily and the price reflects real-time market movement. Mutual funds. Mutual funds are not exchange-traded. Investors buy and sell shares directly from the fund company at the end of each trading day, based on the net asset value, NAV, calculated at that time. Management style. ETFs. Thematic ETFs can be passively managed, tracking a specific theme index, or actively managed, where the provider selects companies based on their alignment with the theme. Mutual funds. Thematic mutual funds are typically actively managed. A fund manager researches and selects companies within the chosen theme, aiming to outperform the market. Fees and expenses. ETFs. Thematic ETFs generally have lower expense ratios compared to actively managed thematic mutual funds. This is because ETFs don't require the same level of ongoing research and management as actively managed mutual funds. Mutual funds. Actively managed thematic mutual funds typically have higher expense ratios due to the ongoing research, management fees, and potential marketing costs. Liquidity. ETFs. The liquidity of a thematic ETF depends on its trading volume. ETFs with high trading volumes offer better liquidity, allowing investors to easily buy or sell shares at a fair price. Mutual funds. Mutual funds inherently have lower liquidity compared to ETFs. Investors can only redeem shares at the end of the trading day based on the NAV, which might not reflect real-time market fluctuations. Tax implications. ETFs. Buying and selling ETF shares on an exchange can trigger capital gains taxes depending on the holding period and individual tax situations. Additionally, some actively managed ETFs might engage in more frequent trading within the fund, potentially leading to higher capital gains distributions for investors, even if they haven't sold their shares. Mutual funds. Mutual funds may have capital gains distributions throughout the year, even for investors who haven't sold their shares, if the fund itself buys and sells holdings frequently. This can be a tax disadvantage for investors in a non-tax-advantaged account. Investor considerations. When choosing between thematic ETFs and mutual funds, consider these factors. Investment objective. If you prioritize low fees, transparency, and real-time trading, thematic ETFs might be a better choice. If you value active management and a potentially higher potential return, though with higher fees, a thematic mutual fund might be suitable. Investment timeframe. For long-term investors, the slightly lower liquidity of mutual funds might not be a significant concern. However, short-term investors might prefer the easier entry and exit offered by ETFs. Tax efficiency. If you're in a tax-advantaged account, taxes might be less of a concern. However, in a taxable account, consider the potential for higher capital gains distributions from mutual funds. How can thematic ETFs be used to generate income for long-term investors? While thematic ETFs aren't typically designed specifically for income generation, there are some ways long-term investors can potentially utilize them to achieve this goal. Here's a breakdown of these strategies, along with important considerations. Limited income potential of thematic ETFs. Growth focus. Thematic ETFs are primarily focused on capital appreciation through exposure to companies within a high-growth theme. They typically don't distribute dividends regularly, unlike income-oriented investments like bonds or dividend-paying stocks. Potential strategies for income generation. 1. Selling covered calls. Concept. This option strategy involves selling call options against existing ETF holdings. The call option grants the buyer the right, but not the obligation, to purchase the ETF shares at a certain price, strike price, by a specific date, expiration date. In return for selling the call option, the investor receives a premium upfront. Income generation. If the ETF price stays below the strike price by expiration, the call option expires worthless, and the investor keeps the premium as income. However, if the price rises above the strike price and the option is exercised, the investor is obligated to sell their ETF shares at the strike price, potentially foregoing further capital appreciation. 2. Investing in thematic ETFs that hold dividend-paying companies. Selection strategy. Some thematic ETFs focus on themes where the underlying companies tend to pay dividends, such as clean energy infrastructure or healthcare innovation. These companies might prioritize returning a portion of their profits to shareholders through regular dividend distributions. Income potential. By investing in such thematic ETFs, Investors can potentially benefit from both capital appreciation within the theme and a stream of dividend income from the underlying holdings. However, the overall dividend yield might be lower compared to dedicated high-dividend ETFs. 3. Tax-advantaged accounts. Account benefits. Holding thematic ETFs in tax-advantaged accounts like IRAs or 401(k)s allows for tax-deferred growth. Reinvesting any capital gains or dividend income within the account allows for compounding growth without immediate tax implications. This strategy can be particularly beneficial for long-term investors. Alright, so we've covered a lot about thematic ETFs. Remember, they can be a powerful tool for growth, but use them strategically. Focus on long-term trends, diversify across themes within your portfolio, and prioritize research to understand the underlying companies. Thematic ETFs might not be a magic bullet, but with careful planning, they can help you ride the wave of innovation and grow your wealth over time. Thanks for joining us. If you enjoyed this video, leave a thumbs up and subscribe for more investment insights. In the comments below, let us know which thematic trends excite you the most, and what questions you still have about thematic ETFs. We'll do our best to answer them.